Welcome.
This is another episode of the Defenders of Business Value podcast, a podcast where we talk about what makes a business valuable, learn the tips and tactics to increase your company's value that only veteran deal makers know. And now, here's your host, Ed Mysogland.
Welcome to another episode of the Defenders of Business Value. I'm your host, Ed Mysogland, and today is one of the fan favorites when market data gets released. So today we're going to talk about the results from BizBuySell, from the M&A source, from deal stats, and then GF data. And what the overall theme seems to be that, valuations are holding steady. So we're not seeing a lot of change in business value multiples changing up or down, to reflect the risk of the market. But what we are seeing is deal volume down. Now, different brokerages and M&A shops have not necessarily reported that. Maybe in third quarter, but typically in a brokerage, or an M&A shop, what we find is that deals tend to happen. There's spikes in the fourth and first quarter, so you need to take some of this information with a little bit of a grain of salt. So we're going to begin, this podcast with reviewing each of these four data sources. And if you are listening, there's a YouTube video that I'm sharing, sharing my screen and showing you, the market data. There'll also be links in the show notes of everything that I'm talking about. So I hope you enjoy this episode with quarter three data. One of the best things that I think BizBuySell does is offer this insight report. It's free for everybody. I'll have a link in the show notes. But every quarter, they're talking about the data that's happened in this past quarter. So what I want to share with you is, I'm not going to read this to you, but generally speaking, there is a little bit of a drop in the number of deals. All right. So you can see here in between each of these quarters, it is behaving the way it historically does year over year. All right. 20 and 21, I'm going to kind of disregard, but generally speaking, there's upticks in Q4 and Q1. And then Q2 and Q3 tend to be down a little bit. What we're seeing here is that the multiples are a little bit down. The volume is a little bit down, but you're going to see that here on value multiples have stayed somewhat consistent. All right. So we're here over the last couple of years, there's a volatility early in, the median sale price versus the asking price a little bit, but you can see generally speaking that the ask versus the sale price is remaining somewhat constant. Here we're talking about, this is one of the new things that they've been tracking is the BizBuySell confidence index. And you can see that, that is kind of all over the board, especially, during the pandemic. And now we're seeing that, at least half of the sellers are saying that it's difficult to sell businesses in this environment. And I think the most telling thing, is that this index, sellers are thinking that, next year is not going to be necessarily any better. So when we move over to the actual website, and you can see the URL up in the corner, when we're looking at the business insight report, and what we're looking at is what's called the interactive data. And what I want you see, especially if you're a business owner or someone that advises business owners, you can see that let's look at the multiples here. The average revenue multiple is right here. And there's not a whole lot of volatility. All right. And again, this is all businesses. And I mean, you can cross, I'm sorry, this is actual, let's look at businesses sold. You can see that the average revenue multiple is between 50 and 60%. All right. And it has been that way for, all of the quarters that, and this is again, nationwide. So there's not a whole lot of volatility here. And then you look at cash flow multiple, you're roughly at 2.5 times solid discretionary earnings, defined as net income plus interest, depreciation, amortization, plus officers' comp in all forms. So you can see that there's not a whole lot of change that's going on. Even though the cost of capital these days is running roughly about 10% through the SBA. So that's biz buy sell. So next we're going to move on to deal stats. Deal stats is I shouldn't say aggregator, but it is they collect market data from brokers, CPAs, public companies, and they compile them into what's called deal stats. And people like me use that for market data. And when I say market data, the same way a realtor would use different attributes of homes that have sold, we're using it as proxy for value, or at least give us a sanity check to make sure that what's the investment, theoretically the investment behavior that a buyer has toward a particular investment. Theoretically, given everything being equal, the next buyer should probably behave in a similar fashion. So let's talk a little bit about deal stats. Let me share my screen, and we have deal stats. So deal stats, this is like biz buy sell. You're seeing that deal stats, the multiples have, in this case, have dropped a little bit. They're just a slight decrease, and as an appraiser and a deal guy, that doesn't really shake me up a whole lot, because there's a myriad of reasons why the multiple may have changed just a little bit, especially when we're talking about quarter number 2, or I'm sorry, quarter number 3 results. So you can see that you're teetering right around a multiple of 3.4 times EBITDA, earnings before interest, taxes, depreciation, and amortization. And then you can see the trailing 12. You can see that it is going it's, I don't want to say going in the wrong direction, but as we look from here 2017 to 2023, generally speaking, the cost of capital had a lot to do with, and the pandemic had a lot to do with what was going on in the multiple world. So now let's go see what happens when we look at revenue. Same kind of thing. There's a little bit of a trail where we're running roughly 50% of revenue, and so at 50% of revenue, that's a rough rule of thumb, but the median, and again, and I want to preface this, that, this is based across all companies, not, there's different companies that, or different industries that have higher than normal, revenue as well as EBITDA multiples. So don't arbitrarily just take 3.4 times EBITDA, or 50% of revenue, and go say that's my business value, because it may not be. But generally speaking, this is, as a whole, looking at all businesses, this is kind of where they're landing. And the point of the podcast is that the multiples are hanging pretty consistent. Volume does appear to be down. Interesting that the earnings, the EBITDA margins, continue to remain high. You see these two little peaks here and here. Most of, some of it was artificial with, with COVID and PPP money and different ways that the companies were buoyed during the pandemic. But now, they're kind of returning to normal, but they're still high. So, businesses that are running, you're talking a 16% EBITDA margin. Now, EBITDA here, and this is Ed's opinion. I can't refute it. I say, at 15%, my bet is that there's some officers' compensation embedded in there. My bet is that there is. 15% EBITDA is a pretty strong number. But at the same time, it could very well be that, this is why companies are selling, because they have such a strong EBITDA margin. All right. You can see here on the next slide, you can see the different industries and information, and online businesses are leading the way as far as EBITDA multiples. There's a huge land grab going on for anything online. So we're seeing a lot of this, as well as, there's a lot of micro businesses that people are paying a considerable premium, just to get the digital footprint. But generally speaking, you can see the last 12 months, there's very few industries that are up over the prior 12 months. So, take that with a grain of salt, but generally speaking, the multiples are, down a little bit. The selling price, here's the median selling price to EBITDA. You can see, it's remaining, these are the different types of buyers. I'm looking at, private buyers to private sellers, which is this gray line here. And you can see that, it's that the EBITDA multiple is a little, is going, fairly consistent. When you start selling to public companies or private equity groups is when you're starting to have multiples that are considerably different and probably considerably higher. But you have to remember that there's a reason behind why those multiples are so high, and that becomes a strategic reason, meaning that the 1+1 theory all of a sudden becomes, the 1+1=3 theory becomes a considerable reason why the multiple is so high. So my point to you is, as you're looking at businesses, the lifestyle businesses where, the business owner is selling from, as an individual seller, I'm selling to an individual buyer. The multiples are not necessarily changing dramatically. When you start moving into strategic buyers, they are selling. The multiples can be considerably different. I will include a link to the to these studies so you can see for yourself. But you can see that as you look through them, the multiples don't change a whole lot. The median multiples don't change a lot, similar to biz buy sell. And so, so my point is that, the biggest thing that a business owner can focus on is earnings, not really get too shook up on, what necessarily the multiple is. All right. So that's deal stats. We'll move on to M&A source next. All right, let's talk about the Market Pulse survey that was recently released. So, the Market Pulse survey, the first thing I want to draw your attention to is, again, the good news is that we're consistent across many data sources. So the first thing is that, is it a seller's market? And the answer is no, it's not. And the reason is, and this you can see, and we're on the M&A source here, the different businesses, they're all tracking somewhat similar trajectories that, we're down. And, as we move in, there's a bunch of reasons why it can be the interest rate, could be the inflation, could be, we're coming into a election year. All those things play into deals. And so my point is that right now, good businesses, again, are will sell in any environment. Those that, I don't say are marginal, but those that aren't necessarily best in class, there's going to take some work to get those done. So, so I want to draw your attention to that. Confidence is pointed in the wrong direction as far as being a seller's market. Business value, I want to draw your attention to the median multiples. So you can see in the last 4 quarters, and here I'll for those of you that don't have the benefit of seeing this, I'll talk you through it. So generally speaking, on the businesses that are less than $500,000, consistent across the board, those from $500,000 to $1 million, generally or speaking, are roughly, there's not a whole lot, maybe 5-10%. When you get into the $1 to $2 million, you're starting to see you're starting to see a bit of a change, especially when you look at quarter number, this most recent quarter. So you're still running at roughly a 4x times EBITDA, and that is somewhat consistent with what has happened in previous quarters. But again, they're hanging, that range, the 1 to 3 is still hanging on between 3 and 3.3. When you move to the 2 to 5, 2 million to 5 million, you're running 4 to 4.3. And then when you move into the 5 to 50, it's just kind of it's a strategic value, and I don't want to say it's all bets off, but you tend to be running closer to a 6 multiple. So now, you can see that as far as ask to selling price, they're hanging in there. The smaller businesses, of course, there's some more volatility and more negotiation. They're getting roughly 80 to 90% of ask. The 500 to $1 million are running between 90 and 96. The 1 to 2 million, same, are running 91 to 97. The 2 to 5 million are running over ask. And you're gonna say, well, why is that? The more, I want to say the more educated, let's just say the more sophisticated the parties are, and the deal team that you're bringing, the greater the chance that the structure is going to be more advantageous. Not that below, the 5 to $2 million range is not, but what it is, there's a lot of, you tend to be working with a lifestyle owner as opposed to, somebody that is working as a, that has tiered management and different attributes that increase the value as you move upstream. So where I'm heading with this is that you're still 90 to 95%, and most deal shops will embed some level of padding, just for negotiation. This next part down here is probably another telling reason. One, this is those that are exiting without a plan, and this can solve a lot of the problems. 80% of those that are sub $500,000 don't have a plan. 53% between 500 and $1 million don't have a plan. 1 to 2 million, 43% don't have a plan. 2 to 5, 45% don't have a plan. And then the 5 to 50, it's 29% don't have a plan. But the good news is that it's better than it has been. So the good news is that, there's more of an awareness of, the exit process. We're not there yet. And I think those that are underserved, especially the $500,000 or, the $1 to $2 million range, the underserved population, I think they need, more hand holding, in order to achieve a superior result. As far as why people are selling, retirement continues to be the number one reason. The time to close, it's still running, roughly, between, roughly a year to do it. There's really there wasn't any big changes as far as where the buyers are coming from. They continue to, you're seeing more private equity and strategics that are dipping down into the $1 to $2 million range as tuck-in acquisitions. But generally speaking, it's status quo. Everybody's looking for good deals. So let me see if there's anything else. No. So that concludes the M&A source. And finally, I wanted to share with you some of the market data for that's from GF Data, which is owned by the Association of Corporate Growth, or ACG. I want to show you that two things. One, this is for a presentation that I'm giving this week to a bunch of attorneys. For those that are, that don't have the benefit of the video, what I'm showing is the enterprise value between 10 and 25 million. We're running anywhere from 5.7 to 6.5 is the multiple. And what I'm showing here is that as the deal gets bigger, the multiples get bigger. So you can't, where I'm heading with it is that you can't just assume, you hear somebody sold at a 10x, you just can't blindly layer that on top of your $5 million company. So what I'm showing you here is this is across all industries. So the 25 to 50 million currently is running at a 7x, 7.1x. 50 to 100 million is running at 7.7, and 100 to 250 million, 9.6, and then 250 to 500 million is running at 10.3 times EBITDA. And so when you do have the opportunity to see this on video, you'll see that as the deal gets larger, as does the multiple. And the reason, a little bit of valuation background is the multiple reflects risk. So the higher the multiple, the lower the risk. And size matters in doing deals. That, a business that has critical mass can offset, potential, downturns in the economy. Right now we're seeing a bunch of businesses that are out looking to grow through acquisition. It's easier to go out and start picking off competitors than it is to grow organically. And so if you're in the market to sell, it wouldn't surprise me if you're hearing from a lot of either private equity groups that are looking at adding to their portfolio, or they are looking at growing through acquisition. The next thing I want to draw your attention to is this. Those businesses that are sub 25 million, all right, the multiple generally stays pretty consistent until you hit 25 million. 25 million tends to be the line of demarcation where all of a sudden it's an entirely, all bets are off as far as multiples go. Before that, you can get up to, uh, 6 to 7x EBITDA or 1 times revenue. But once you hit that $25 million mark, it is, like I said, all bets are off, and it turns into strategic value, and the multiples can be all over the board, as this graph that's going up and to the right reflect. So my point with the larger businesses, especially if this is the year you're, if it's this year or 2024, if you're thinking about selling, well, if you're north of $25 million, there is good cause for you to pump the brakes and either find a specialist or find somebody that's going to get you some recon on, what businesses in your space are selling for. We have a service where we have, where we do market studies, where we're engaged to go out and under total anonymity, we go out and we figure out, what are the value drivers of these types of businesses, and we report back to you, and let you know that here are the 15 people that are looking at buying, and here's why they're buying, and here's what you need to consider if you're going to enter into the deal theater. So that kind of concludes market 3 market data. So that concludes, what's going on with the market data, and where deals are. For those of you that are exploring, is where do I fit in? We offer a complimentary service for you to do a self-assessment. It's called Value Builder. It addresses 8 drivers of value. It'll give you a pretty good idea of where the chinks in your armor are. If you're not, you're just exploring and just kind of want to, see where you fit in. I give you my word. I'm not going to hassle you. I'm not going to, this is not a signal for you to sell. It is just simply a tool that we use, that we want, business owners to become more aware. And so, if we can help, happy to do it. We've been here for 41 years. We're not going to go anywhere. So, hopefully that this episode was helpful to you to see where your business might be landing. If you need, more valuation help, I'm always happy to come alongside and tell you what I know, and I'll let you know way in advance if I need to turn on the meter. So, like I said, 2024, 2020, the remainder of 2023 is kind of already baked in, and I kind of have an idea of what's going to be closing. 2024 is going to be, I tend to agree with the rest of the sentiment of some of these sources that I cited. It may be, it may be a more of the same. Don't know, but if I can help in any way, you know where to find me. All right, we'll see you next week.
This was another episode of the Defenders of Business Value podcast. For more episodes packed with strategies to increase the value of your business, visit defendersofbusinessvalue.com for show notes, transcripts, and free tools to start you on your journey. Subscribe now so you don't miss any future episodes.